Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for the week ending on August 8th, 2009. We ended another calendar month, and what I always like to do is take a step back, look at the market from a broader term, long-term point of view. We're looking at the S&P ETF, the SPY, on a 10-year monthly view. Now, in my past videos, every time we look at the 10-year monthly view, I always mention that this 20-month moving average is a very good target for a retracement for the market. Actually, I've recently uploaded a video talking about moving averages, how every time when price gets pushed away from the moving averages, it always has to come back towards the 20 moving average in regardless of time frame. And this week, we actually managed to satisfy that criteria. The market has worked itself out of that extreme condition and has come back towards neutral, so to speak. Okay, it's what I like to call neutral. You can even see the stochastic is out of oversold and the MACD is back into the positive territory. So this is telling me from a long-term perspective that the market has come out of the extreme conditions here and is back towards a neutral position. So it's telling me that it's ready. Okay, I'm not saying that it will anytime soon, but it is ready to roll over and start a new leg lower. Okay, and that's all it's telling me, that it's no longer extreme. The only thing is we're not exactly sure when it will roll over. You know, I hear opinions all the time, but we really don't know. So, but that's something that we can keep an eye on. The only thing that this whole monthly view tells me is that we pretty much fulfill the criteria as far as a minimum retracement for the market to correct this down leg right here. Okay, next we go into a 3-year weekly view. Nothing really much has changed this week. The market just keeps chugging along, right? Like this raging bull, right? It's got somewhere that it wants to go and nothing's going to stop it. Okay, so we have resistance looking back here at 105. If this thing continues to move higher, I would say 105 previous gap right here, you can see, would be a very good target. But, that's if and only if we get some follow through with Friday's bullishness. But other than that, you would notice that the MACD is starting to show weekly divergence, which is a little more significant than a daily or an hourly because it's a longer term. Okay, so longer term divergence means that it needs to work itself out even longer, or at least to me, it's more significant when you see something like this in a bigger time frame. So that's something to keep an eye on. Okay, now we go into a 6-month daily view. Really, nothing much has changed from last week. The market, like I mentioned, just keeps moving, just keeps going higher and higher. A lot of emotional buying, and that's really what I think it is. A lot of people who just want to get a piece of the pie, right? They just want to get some action. The market's going higher. Every time there's a little bit of a dip, you see buyers come in and pick it up. Pretty much what happened on Wednesday and Thursday. I would suspect at least Wednesday and Thursday was a possible top, seeing we had a couple of selling days, but Friday just came out of nowhere and just pushed this market even higher. We stopped right at 102. Okay, you know how I like even numbers. The market just stopped right at 102. I think 102.3 or oh 03. We can disregard that, but 102 is a really nice even number for the market to shoot for. Um, as I mentioned, the market is really emotional right now. So a lot of times, even though the market has been screaming overbought and there's screaming divergence, you pretty much have to disregard it because at this point, it doesn't really matter anymore. The technicals don't really matter. All you really have going for right now is just looking at price patterns, price movements, and trader sentiment. And that's really what we have going for it because, as I mentioned, indicators are pretty much useless right now. So knowing that, the best thing we can do is just look at price levels, okay? If 99 right here is a pretty good support, we managed to touch it or test it on Thursday. If the market breaks underneath 99, I would say that would be a pretty good confirmation that the correction has started. But you can see there's some pretty major gaps going on, especially here. If we break underneath 99, this gap is most likely will be tested. That's around the 97, 98 area. Okay, so underneath that, I would say is 97 here. So this is a whole area of support right here. Any break underneath 99, 97 will most likely be tested. Now, as far as possible targets, assuming Friday is a top, if we put in the retracements, 38% will bring us down to about 96, which kind of makes sense because 96 was a previous resistance. And as we all know, previous resistance becomes new support for the majority of times. Anything deeper and will bring us to the 50%, which is around 94.50. And then even more so, at 62% will bring us all the way back down to 93. Given that the market's gone up so pretty high, I kind of doubt 93 will be reached, but you never know. Okay, so you always want to have these targets in the back of your mind. First is 96, then 94.5, then 93. Now, whether we will hit the 38% retracement next week, we're not too sure, but it's something to like I said, just keep an eye on. But first things first, we got to make sure that 99 level, that next support level, gets broken before we can even worry about these levels here. Now, I don't normally do this, but I kind of want to talk about what happened on Friday. This is the 5-minute chart, intraday chart of the SPY, and this is what happened on Friday. What happened Wednesday and Thursday, almost identical. We had the morning sell-off, buyers came and bought the dip. Morning sell-off and buyers more or less came and bought the dip. And on Friday, buyers came in and sellers sold on the rally. Okay, so a shift in dynamics right there. So whether that has any significance, I don't really know. Okay, but I just thought it was pretty interesting to point out how you have a complete shift in buying momentum from Wednesday and Thursday into Friday. Okay, next we go into the VIX, looking at the sentiment. Still, the VIX is showing divergence. Market continues to make a new high, but the VIX, as you can see here, didn't make a new low. Okay, so volatility-wise, traders are expecting still higher volatility, okay, to come for the market, and higher volatility usually means a decline, as we saw all know back in 2008. So going back to the market, everything is showing divergence. As I mentioned, everything is overbought. Everyone is trying to call a top. Everyone is suspecting that the pullback will happen soon. And so many times people got burned trying to short the market. And that's why this rally perpetuated longer than necessary, because so many people try to call the top that every time it surpassed their stops, they just got squeezed. All right, a lot of shorts keep getting squeezed. So please stop shorting the market. Okay, I want the pullback. I've been waiting for the pullback. All right, as soon as you stop shorting the market, people will stop getting squeezed, and that's when eventually prices will start dropping back down. All right.